Ready? Are we?
Yeah, we are.
We got camera ready?
Yep.
Good, let's roll.
All right. So here we have Walter, our fictional defensive linebacker. He's driving to his home game in his brand new Lamborghini when suddenly his car just stops in the middle of the road. Now, Walter ran out of gas because he wasn't mindful of how much was in there. And now he's probably going to miss his game.
Just like gas, if you run out of money, you aren't going anywhere. Athletes tend to be fiscally irresponsible, meaning you might all not be monitoring money as well as you should. I mean, you have all this money, so where does it actually go?
So we're here to tell you how to manage your money by saving for the future and how to invest your money and make it grow.
First, we want to talk to you guys about long-term saving. So IRAs, or individual retirement accounts, are for when you retire at the age of 60. But of course, you guys are going to be retiring a little bit earlier than that. But it's still important. There's two types of IRAs, Roth IRAs and traditional IRAs. Roth IRAs, you invest money that's already been taxed so that when it grows, it doesn't get taxed again. But you're not eligible for these because you earn more than $132,000.
Unlike Roth IRAs, traditional IRAs let your earnings grow tax deferred. You pay taxes on investments only when you're in retirement. And most importantly, there is no income limit on traditional IRAs. However, you cannot make contributions past the age of 70 and a half.
If you're interested in more short-term savings, there are CDs and MMAs which both offer higher return rates in comparison to savings accounts.
Now, CDs, or certificate of deposit, is a great way to save money while earning some extra cash. It's good for saving up for a car or going on a vacation. Now, even though CDs have lower return rates, anywhere from 1 to 5%, the more you put into a CD, the more you get back. Now, there are restrictions, however. They have maturity dates that can range anywhere from a few months to 5 years. This means you cannot access your money until the CD hits its maturity.
However, with MMAs, you can access your money at any given time. So MMAs, or money market account, is a deposit account that's higher risk. It pays based on the current return rate in the market, so it fluctuates. MMAs, unlike CDs, are high yield, meaning that they pay with the higher return rate, so you make more money over the same period of time.
So let's say Walter had made it to that big game, but when he got there, he broke his leg. Now, if Walter had been saving money, then he'd be fine. But of course, he had to buy that new Lamborghini, so now he's going to be left empty-handed.
Now that you have started saving money, why not invest your money and grow it? Make more money today. There are two types of investments, bonds and stocks. With stocks, there are two types of stocks, preferred and common stocks. With common stocks, you can vote at shareholder meetings and receive dividends for your stocks. With preferred stocks, you don't receive any of these benefits. Although stocks are a high risk, they also yield the highest return. The more stocks you have, the more security you have in a company. And stocks are also the foundation for any portfolio.
Now here's a real-world example of why you all should invest in stocks. In an interview with Magic Johnson, he was recognized on well he had done business-wise. But then he was asked if there was anything he had missed out on that he wished he hadn't. With no hesitation, he said yes. As a rookie athlete fresh out of college, he was approached by all these major shoe companies. And then there was Phil Knight, the founder of Nike. All these shoe companies offered him money, but Phil Knight was just starting out his business, and he didn't have any money to offer him. But he had stocks, and he had a lot of them. Unfortunately, Magic didn't know anything about stocks then, so he said no. However, in the interview, he stated that he's still haunted every time he walks into a Nike store because all he can think about is how he could be making money off of every person in that store if he had taken the chance to invest in Nike stocks when given.
Now, a safer way to invest would be the bond market, or the debt market. Because when you buy a bond, you're essentially purchasing a company's debt. You give them a loan with a fixed interest rate. This means that when they pay back the principal, you get all the interest that is accrued over the years. Now, even though your interest rate is fixed, the market rate can fluctuate. So if the market rate raises, your bond might not look as good. However, if the market rate lowers, now your bond is worth more because the rate's higher than the market rate. And similar to stocks, you can sell your bonds back on the market. So if you have a very attractive bond, you'll have a lot of potential buyers that might want to purchase it higher than you initially paid for it.
And then there's a newer form of investing called equity crowdfunding. This is an online mechanism that enables broad groups of investors to start fund-up companies and small businesses. So you, as an investor, put money into a company, and in return, you receive a portion of it. As the business succeeds, then the value of the business goes up, meaning you receive more money in return.
So just like Magic Johnson, Walter had the chance to invest in some local businesses along with his teammates. Of course, Walter decided not to because he didn't care. But the rest of his team did. Now that those small businesses are doing really well, all of his teammates are making a lot of money, while Walter, he's not making anything.
In conclusion, do not end up stuck on the side of the road with no gas.
Start saving for your retirement and set short-term saving goals.
Don't miss out on opportunities to invest your money and make it grow.
And don't be like Walter.
Invest in your future today.